Well, thank you all for showing up today. If you haven't gotten pizza or drinks yet, there's a ton over there, so please feel free to grab as much as you want. My name is Rocky Nankani. I'm a principal at the University Growth Fund, and we're a traditional venture capital fund. What's a little bit unique about us is that we do a lot of programming to help students such as yourself break into the industry through opportunities like the case competition that we're running. Generally speaking, the case comp is really designed to help you if you just are a little bit interested in venture capital, you have no idea what it is, you're hoping to learn more, that's where you come to learn. If you really like what we're doing here at the case competition, we have a whole internship program built out for our students. We've got a few of them here today. Put your hands up real quick so they can see you. They're current interns and analysts at our fund, and really their job is to look at the potential investments that we're looking at and tell us whether or not we should cut a check of $250,000 all the way up to $2 million. So real money, real companies, some really good hands-on experience. Works. Okay, so just quickly go over the agenda here. I'll kind of go through a little bit more deeper of an intro to University Growth Fund, who we are, what we do, and how we do it. And then we'll cover the competition rules and the schedule. And then we'll start our first workshop. So we'll talk a little bit about, kind of an intro to venture capital, what it is and what kinds of companies we look for and how we invest. And then we'll touch a little bit on dual sourcing, what that is, how to do it, and so on. And then I'll leave some time at the end here. If you don't have a team yet, there are several of you that have signed up as individuals. You can find someone here to work with. If you're online, I'll leave the Zoom open for a little bit longer. Go ahead and what you need video too. So that. Okay, so University Growth Fund. Okay, we are the largest student-run growth equity fund in the country. We just closed our second fund, so we manage about $87 million across both of those funds. And then to date, since we launched in 2015, we've invested in 71 companies, soon to be, I don't know what, we're like 76. We've got a bunch of companies that are going through investment committee right now. And we've got 60 students in our program across Salt Lake City, which is where the company was founded, San Diego, and then as of last year, we opened an office here in Atlanta. In fact, our office is just behind that white building right there. We're super close to Georgia State's campus. What's really cool about what we do is we get to invest alongside top tier investment firms in the best early growth stage and late stage deals across the country. I don't know if you're too familiar with kind of the big names in venture capital, but Sequoia, SoftBank, Tiger, Excel, GV, we've co-invested with a lot of those firms. In fact, we had a partner from Tiger Global to come and talk to our group pretty recently. So that's just one of the other benefits of working with our organization. As I said, we manage about $87 million, and here's just a handful of the companies that we've invested in today. So, there's some really good brand names in there that you can recognize, right? Snapchat, Spotify, Airbnb, Lyft, Klarna, which is kind of having a tough time if you're familiar with the story there. But anyways, all that to say, when these companies are still private, before they've gone public, you get to look at these companies. And why that's really helpful for you as a student is when you go out to interview, whether that be in investment banking, private equity, venture capital, you can talk very knowledgeably about why you think investing in, Snapchat or Spotify was a good idea, right? To talk knowledgeably about an investment thesis at this stage of your career is honestly difficult to come by because you get access to these companies' financials. We're running calls with the entrepreneurs and the founders. So oftentimes, these student deal teams are led by students, and they're the ones that get to interface and interact with these founders and entrepreneurs. I'll talk a little bit more about that later, or maybe right now. Okay, this slide really explains how much of a focus we put into our student associate program. You think about internship programs, and oftentimes they are a satellite business operation. For us, it is core to what we do. We invest money, and we also invest in students and their futures. And the way that we do that is by creating this really unique student experience. So I'm going to start on the left and kind of go all the way around. You have the opportunity to develop your skills as a leader. What does that mean? Our deals, once they come into the pipeline, we'll actually staff up a team of students to run diligence, to interface with the entrepreneur, and to make investment recommendations. And the way that comes through is through an investment memo. So our students write a 40 to 80 page investment memorandum detailing, based on the financials, the business model, the management team, how big the market is, their position in the competitive landscape. This is why we should or should not invest in the company. Now, that entire team of 7 to 10 students is led by another student, one of your peers. And so you learn how to lead teams. You learn how to interface with entrepreneurs. And these are CEOs of some really big companies, right? Like we were talking to a founder the other day, and his company just raised at a $500 million valuation. Like these are, some really, really, really successful and interesting entrepreneurs. Again, we're investing real money into real companies. So you're getting real experience. This isn't a simulation, a case study, or whatever. This is the internship anyways, is really what it's like to work at a venture capital firm, at least as an analyst. We also provide our students with some really unique mentoring opportunities. So we have a lot of our more senior students mentor the kind of newer and younger students, but on top of that, we have mentorship programs set up with other private equity funds around the country. So, for example, we are really close with a group out of Denver called, oh gosh, I'm blanking on the name, Partners Group. Partners Group manages over $100 billion in capital. They invest in real estate, private equity, venture capital, and other funds. Their students not their students, their full-time employees or former students will come back and mentor our current students to kind of shepherd them through, here are the different career paths that you can take. Here's what you can do now to really better prepare yourself for a career in private equity, so on and so forth. You can also reach out to as a student, you can reach out to our alumni. We've had 500 students come through the program who are excited to talk to current students and kind of guide them through the process, because every one of our students was in the shoes of our students, today, working as an intern, diligence of deals. And, a lot of them now are working at the top private equity funds, investment banks, so on and so forth. So when a current student reaches out to them, they will answer every single time and, help get their resume to the top of the stack for whatever company they're applying for. We also have a really robust training program. So look, day one in the internship, you get thrown on a live deal team. Right. So you're on the team saying, the market size is this big, and this is what I think about it. Now, we don't totally throw you into the deep end by yourself. We'll pair you with someone that's been there for a little while that can kind of show you the ropes. But alongside that, you will get, we'll put you through our training program as well. And we'll kind of just cover the basics, like from a high and a more specific level, like what it is to analyze competition, financials, valuation, and so on. And that is a graduated training. So as you get promoted to analyst and associate and senior associate, we have graduated trainings that go along with that. And then we have really unique internship and job opportunities. So I've got friends that I came up with. So let me preface this. I went through the program as a student myself before coming on full time. So I know what it's like to be a student in your shoes and undertake this opportunity. It was the most valuable thing that I did as a student. I was actually just back in San Diego, which is where I went to school. I was sitting on a panel, and they kind of hate when I do this because I will say time and time again that University Growth Fund was more valuable than my college experience, like hands down. And it's because I knew I wanted to get into venture capital, and the skills that you build while you're at University Growth Fund translate to exactly what you're going to do in your first, second, and sometimes your third job out of college. So all that to say, a lot of the students that I came up with in my cohort, I'm still really close with, and they will come back and tell me like, hey, we're spinning up an analyst program. We're spinning up an internship program. Will you send me the resumes of students that you would like, that you think would be great for our fund? So these are jobs that will come through us and the two partners, Tom and Peter at the fund, that will never end up on a job board like Indeed or the other ones, LinkedIn, and so on. So we've got a lot of really unique job opportunities that come directly to us and not a job board. Finally, there are some really great networking opportunities. So in a couple of weeks, Atlanta's got their whole innovation week. So Techstars is doing a demo day. There's a big investor dinner, and then like all of the VCs in the Southeast will fly into Atlanta for Venture Atlanta, big conference. We have our students volunteer on one day so they can attend the other. I think this year we actually might be able to get score tickets for you guys so you don't have to volunteer at all. So TBD. Anyways, all that to say, like, this is a really unique opportunity to network with professionals in the industry. We also take our students in Utah to Silicon Slopes Tech Summit, our students in San Diego to Startup Week in San Diego. Pre-COVID, we haven't done this since, but we used to fly our students to Vegas to go to CES. It's a big something show. Anyways, big conference, Vegas, tech. And then also to San Francisco for TechCrunch Disrupt, which is like an amazing experience for students to encounter both VCs, but also startup companies.
You're saying you provide us the opportunity to go to TechCrunch?
Yeah.
Oh, yeah. Great.
I know. We used to do a trip. I haven't gotten to do this yet. I've been at the fund for 3 years now. This is before I got there. We used to do a trip or they used to do a trip to Sand Hill Road and just visit all the VCs on Sand Hill Road. You know, who knows what Sand Hill Road is?
I think I've been there.
Yeah. What is it? You know? Oh, this is.
Maybe I have. Is it next to Sanford?
It's close. Yeah, it's in that area.
Maybe I've been.
Andy for the right answer. Who knows? Ready? Yeah, so it's basically the main road. So you think of like Wall Street, right? Is what where all the big finance firms are in New York. In Silicon Valley, that's Sand Hill Road. So you've got all the different VCs from Sequoia to what am I missing? Sequoia and Andreessen Horowitz is another big name. So yeah. Yeah, we used to do a trip to Sand Hill Road and visit all the different venture firms out there, which is a really cool experience that I'm hoping to do. So. Anyways, all that to say, like, these are some really cool networking opportunities that you get to do with students, right? And this is like, look, it's an unpaid internship, but all these opportunities that we provide for you are just like unmatched. And our students at graduation are averaging about $95,000 starting salary. I think that's all income. But either way, like you're close to 100K starting from undergrad. Because we often place in investment banking, private equity, VC, which are generally higher paying jobs. So I don't know. To me, it's worth it. You know, when I was going to school, I worked 2 other jobs in addition to like running 3 clubs and taking a full course load and spending all my time at UGF to a point where they were forced to hire me when I graduated. So I don't know. It's doable. It's definitely worth it. Just really quickly, kind of student advancement in the fund. You'll come on as an intern. We kind of work on a semester system. So for your first semester, you're just learning the ropes. You're getting your feet wet, right? You're like, what is the market size? Like, how do I analyze competition? You're learning all those things. And we expect 20 hours per week commitment out of you. And what you're doing is you are signing up for deals. You're learning how to analyze those deals. And then you are telling us whether or not to invest in those companies. The other really cool thing that we do for our students is every Friday, we have our all hands staff meeting. All 3 offices come on a Zoom. We all meet and we talk about, well, news in the market. We'll talk about all the deals that we're working on. But at the end of that, we'll go through all the companies that we are currently looking at. At the end of each pitch, all the students get to vote as to whether or not we invest in that company. Right. So your opinion matters. Your work matters. This isn't just, you know, go do research and then the partners and myself will kind of make the decision. It's like, look, this is in your hands to figure out. Yeah.
Type of popular vote. Do you also just what's your question? But do you actually go through the process that we should rank order the potential companies to invest in? And if we're pitching ideas and it doesn't sound convincing enough, do you give us pointers on what to work on?
Absolutely. It's a bit of a bloodbath during those pitches, to be totally honest, because the other students are asking questions. Did you think about this assumption? I don't know, that valuation actually looks wrong. How did you calculate the market size? So you look, it's not that big of a bloodbath. It's a learning environment is what it is. And we're going to push each other on our assumptions to get better as we go. So yeah, it's a great learning opportunity. So yeah, you gotta ask the questions. I've got Skittles and Starburst too, so just let me know if you want. Okay. Any questions? I love this slide because I identify with a lot of things that were said here. The first one I want to point out, top left, I was head and shoulders above other business and economics graduates because I did this program. I wouldn't trade my experience for anything. What we often hear from our alumni, the students that have gone through our program, is that they ascend through their ranks a lot faster than their peers because our program mimics what it's like to be not just an analyst, but an associate, a senior associate, a junior partner even. Because a junior partner at a venture fund takes complete ownership of the deal and runs it from top to bottom, including pitching it to the investment committee. And that's what our students have the opportunity to do. So we often hear from our students that have graduated, like, wow, this is exactly like UGF. I can't believe how similar it is. In fact, I know a lot more than my peers because I've done this program already. So love that quote. And then the one just below that, easily the most useful thing I did while in school. I tell my former professors that all the time. And look, they love it, right? Professors, because at the end of the day, we take what you learn in school and give you the real world application of it. So it like very much solidifies what they're teaching in class. Okay, enough of the UGF commercial, I think, right? All right, yeah. Any questions about the fund?
Are you focused on specific industries, or I see the different kinds of companies, and predominantly they're all in tech. So is that where you're focused on?
Yeah, we're pretty tech focused. So we describe ourselves as a generalist fund. We avoid biotech, pharma, life sciences, anything like that. Everything else we pretty much do.
I know of VC companies that do exactly the same thing. They avoid those like a plague.
A lot of them, it's pretty binary. It's like you either do one or the other, and most of them do the other, not the biotech. There's a lot of money to be made in biotech and pharma. It's just a lot of money to be lost, exactly. And so, and that's what we'll talk about for this competition. It's like you have so much money to be gained in the biotech space, but it's so risky. So your returns need to be outsized to justify making that. Great segue. Okay. So now I'm going to cover kind of the venture capital case competition, what it is, the rules, so on and so forth. Yeah. Who watches Shark Tank? Yeah. Who can describe what venture capital is? This is a candy prize. We're going to go with Skittles first. Go for it. What's your name?
My name's Robert.
What is it?
Robert.
Robert. Okay.
Well, venture capital is about investing into early growth companies. That could be startup phase, seed phase, or it could be later stage companies. It's about identifying companies that have a big potential in the future. This is predominantly what venture capital is. They take a big gamble, but then they get a very nice thing.
Yep, absolutely. Those for you.
Thank you. Appreciate it.
So venture capital, it's in the name, right? Venture, new businesses, right? Capital, money. You're finding new businesses to give money to because they actually can't get the money elsewhere, right? You think about if you want to go start a business, you're going to raise money maybe from your own bank account, maybe your family and friends. We call that the family and fools round. But oftentimes you maybe want to go to a bank to get a loan, right? A bank will look at your business plan, see that you have nothing built up yet, and say, absolutely not. You are so risky at this point that the bank can't charge you enough interest to justify giving you that loan. So where do you go? You come to VCs for that money, right? That's why venture capital exists, to provide you capital to start your business. Now, because what is it, like 9 out of 10 businesses fail, right? There is a huge risk inherent in investing in venture-backed businesses. But for the ones that do succeed, boy, can you make a lot of money. Now, the kind of major, like a lot of people think that, venture capital is like Shark Tank, right? You come in, you pitch your business idea, the sharks beat you up and try to like tell you why your idea is terrible. But at the end of it, they kind of like make a deal, right? Now, the difference is twofold. One, they're looking at a lot of consumer companies, which we've done as well. Let's see. Yeah, we've done a handful, right? Copar is like a makeup company and Versailles, a beauty product. We do consumer tech more than anything, not so much consumer products. Anyways, all that to say, the businesses are a little bit different. They're not super high growth like we like to see in venture capital. And one of the major differences is that they are investing their own money In a venture capital fund, you are raising money from other investors, and then you are investing it on their behalf. So a big part of it is, if you want to start your own fund anyways, is convincing people that have made a ton of money that you'll be a better steward of their money than they will be, even though they're like incredibly smart and have made a lot of money. Yeah.
So would it be considered as angel investors versus venture? Shark Tank.
Yes. So the term angel investor just kind of describes how early you invest in the company. So an angel investor is like before you have a product, before you like when you're just kind of in that business ideation like portion. It's all under the umbrella of venture capital, and all of that is under the umbrella of private equity. A whole other discussion. That's just investing in private companies. So yes, the major difference is that the companies that you often see on Shark Tank are going to go from $1 million to $100 million. They're going to go from like $1 million to like 10, which is great. Like that's still really great growth. But you know, a lot of times they're not like tech businesses that have like the opportunity to scale really quickly. That's like one of the major differences. But also they're investing their own money here, right? Like that's another big part of it. And so it just adds in this like additional layer of like fiduciary responsibility, right? Like you have to, on behalf of these investors, do a good job of analyzing and diligencing these companies. And the other piece of it too is the reason that these folks will give you their hard-earned money. Like they're incredibly smart people, right? Like why would they give you money as opposed to invest it themselves? Well, it's because you as a VC, your job is to go and find the next big thing. And not only just to find that, but convince the entrepreneur to allow you to invest. And in addition to pick the winners, right? There are 1,000 companies that you can bet on. They're not all going to be winners. The 1,000 VC companies that you can interact with, but you know, a really good VC is someone that picks the winners, can identify and pick the winners. Kind of obvious, but does anyone know who these folks, the guys here on the bottom right are? I heard a Larry Page and Sergey Brin. What's that? Yeah. What? You're gonna get some. Okay.
Sweet man.
Okay. Did you say something? Okay. These guys are the founders of Google. This is Google's landing page when they first got started. Like nowhere near what it looks like today. But Google is one of those companies that was built in like someone's garage. Actually, the woman whose garage they built Google in went on to become the CEO of, I want to say YouTube. But anyways, all that aside, venture capital is about finding these small companies that have the potential to become huge companies. So at the time, when Google launched, this was like right before the dot-com bubble burst and all that. But anyways, this was right around the advent of the internet. And now everyone knew that cataloging and being able to search web pages was going to be the next big thing. And whoever solved it was going to make a lot of money. So a lot of companies, the approach that they took to it was, you know, we're going to build a huge database. We're going to assign tags and keywords so that when you type it in, whichever one is the most relevant will come up on your search. Now, whoever could win at both speed and quality of search was going to dominate the industry. Everyone was taking the database approach. Sergey and Larry, they were studying to get their PhDs at Stanford at the time. They took a different approach to it. They thought we should use a sort of reference log. So I'll give you an example. If you wanted to Google or just search at the time, because Google was not a verb yet. If you wanted to search, how do I cure the common cold, right? You're going to get a bunch of different web pages. Now, oftentimes these web pages are going to reference one that probably has the best information. So probably like WebMD or Mayo Clinic, right? So Google would rank pages based off of how many other pages referenced WebMD or Mayo Clinic. So the thought process being, if you have a lot of people pointing to your web page, then you must have probably the best one as it relates to the search here. So it would automatically rank you higher and higher. And as the internet grew and more web pages were added and built, it would scale along with the internet. And that ended up being the dominant idea. Google is the de facto search engine. So much so that when you bought a computer, you have Bing, and you used to have Internet Explorer automatically downloaded onto your laptop, and they still couldn't win. You would still go and download Google Chrome, or you would go to Internet Explorer and then go to google.com to do your search. That's how strong and great of a company or strong of a search engine Google built. So all that to say, in venture capital, your job is to try to find that company, right? The next big thing. Now, it doesn't always happen like that, right? You're looking at all these companies and you're like, well, I don't really see Google or like Apple in here and things like that. Well, Airbnb was a pretty good one. But, you're going to take lots of bets. They're not all going to be home runs and grand slams for that matter. You're going to hit a lot of singles. You're going to hit a lot of doubles. More often than not, you're going to strike out. So going back to what is venture capital, we are looking for small companies that have the potential to grow into huge companies, right? So you can look at the annual revenue from Google from 2002 to 2018 in millions of dollars. You oftentimes see this hockey stick growth, right? Oftentimes when you encounter entrepreneurs and you get their financial models, it's got this kind of hockey stick growth, which is not always how it happens. It rarely happens like that. But when it does, you can make a lot of money. So what makes a good VC? We've kind of talked about a few of these things already. Number one, the ability to identify the next big thing. So that includes kind of being up to date on new technology, being up to date on specific industries and markets and like what technology is being built, but also being able to kind of predict the future. There is a group here in town called Atlanta Ventures. They have a venture studio, which means that they just kind of think up ideas that they think are going to be really necessary and successful in the next 5 to 7 years, and then go and build a business around it. Just a little studio, right? Launch businesses. It's wildly successful. They've got 3 unicorns that have launched out of their studio so far. But what they do is they just think 5 to 10 years from now, like, what are people going to need? Whatever that is, let's go build a business around it. They've been wildly successful doing that. Well, not wildly successful. For every, one successful business, again, there are going to be several failures, and we'll talk about that here in a second. The next thing that you have to be good at is finding the company that will win in that space, right? So it's not just.
Someone was asking if the presentation will be public. I said we'll look into sending it.
Yeah, so we won't upload the deck. We will upload the recording of the Zoom. So all this will be there. Okay, so you have to be able to identify the next big thing, but more specifically, the company that will win in that space, right? So at the time, again, everyone knew that search engines were going to be huge. You had Ask Jeeves, if you remember what that one was. You have, I couldn't even remember the other ones anymore. Ask Jeeves was one of them. Yahoo actually had like a pretty good head start. And tried to buy Google actually for $3 billion, but Google said, no, we'll only sell for $5 billion. And what is it worth today? Like a lot more than that, right? So they should have just, anyways, it's about identifying the winner in that space, right? So Google was the de facto winner. And then 3, the other piece that you have to be really good at is convincing that entrepreneur or that company to allow you to invest in them, right? I'm sure a lot of people at the time, once they figured that Google was the next big thing, wanted to invest in that company. They didn't say yes to all of them, right? They picked and chose which investors they wanted to have in that company. So that's another skill set in itself. And now the 4th thing, it's kind of not part of this competition, but the ability to help that company succeed. So that's portfolio company support, which a lot of companies are doing right now because of the market downturn, so on. That's less of a focus of what we're going to do here, but that's where, if you've got experience with business strategy and models and things like that, where you can help your portfolio company succeed by sitting on the board and hiring and so on and so forth. Yeah.
So is there a platform?
Yes. So look, venture capital is very much a relationship. So a lot of the deals that we source today come from our relationships from other folks. That's one piece of it. Now, there are databases and platforms out there, and we'll talk about those because you're actually going to source deals from these platforms that have a bunch of companies that are looking to raise money. Now, the flip side of it, the best companies, the Googles, are not going to be on these platforms, right? So for the purposes of this competition, it's just easier for you to get access to these companies through the portals. But I'll talk about a couple other places where you can look for companies to invest in here in town. That I think would look, one of the major skill sets, and we were talking about this today, is deal sourcing, right? You're good at sourcing deals, you're good at picking the winners, you're good at convincing them to allow you to invest. So
Are you talking about the sources as PitchBook?
it's like WeFunder, Republic, and Start Engine are three of the major ones. I've got a slide at the end that's got all of them on there.
What if the company has already gone public? It's doing terrible.
So for the purposes of this competition, we are only looking at seed stage investments, like actively at the seed stage. So you can't be like, I think Tesla or not Tesla, SpaceX is still private. Like I want to invest in that. It's like, yes, but they're not at the seed stage. They're way beyond that. They're a great company.
So we don't have to look for the obvious grant out there.
You can't, right? Yeah, you're not. Look, if you find a great seed stage company that ends up being the next Google, like you deserve to be in this industry. But look, that's the fun in it, right? Like you could absolutely do that. We give you the opportunity to do that. And the other piece of this is entrepreneurs love talking to students. So as a student, if you talk to them, you're like, hey, I'm in this competition. By the way, you're going to get exposure to a bunch of VCs, not just us, but the judges for the different phases of the competition will be partners in different funds around Atlanta. So that's the other piece of it too. Okay, so the objective of the VC case competition is number one, go find a seed stage company. Number two, due diligence on that company. Analyze the market, the management, the business model, competition, their financials, their unit economics, and model how much money you think we're going to make if we invest in this company today. And then lastly, convince your partners to invest in the next great startup. That last piece is the final pitch competition, right? So the way that funds are structured are general partnerships. So if I go and find a deal and I do diligence on it, I can't just write a check on my own. I have to go convince my partners that this is a good investment. That last piece of it is called investment committee. And that is the final leg of the competition where you're pitching to partners who are VCs, pitching to them why you think this is going to be a good investment. And we will teach you how to find companies. That's the second workshop. We will teach you how to diligence companies. Those are the third and fourth workshops. So it's a quick kind of top to bottom. This is what it's like to be in venture capital, right? And then if you like it, boom, you go do the UGF internship. If you like that, go be a VC. Okay, rules. You cannot do this competition by yourself. You have to do it with at least one other person and no more than 4 people. Any combination of school, major, where you're at in school, so on and so forth. So you can get someone from law school or business school or whatever, a PhD on your team. That's totally fine. The only caveat is you can only have one person on your team that is from a student-run fund, specifically a VC fund. In Atlanta, the one that comes to mind is the Peachtree Minority Venture Fund at Emory. I don't know if GSU has one. There's a portfolio management group, but I don't know if that really counts because it's public equity, it's not private. Startup GSU. Anyone in that?
We have 2 portfolio management groups in this class.
Yeah. Well, perfect. Are you investing in public or private equities?
No, we're investing only in public.
Okay.
Public funds.
You're good there. Startup GSU. Are you writing checks into private companies? Okay. You can't have anyone else from the group on your team, but you can still compete, just not with everyone from that organization. Do we have any folks from Georgia Tech online or in the room? Like the Venture Capital Club, that's fine because you guys aren't writing checks specifically. It's only if you're working specifically in funds. On the deal side of it, you can source deals from anywhere, but they must be current and this is the big thing. You have to have access to their financials, right? That's like kind of in order to develop the skill set of sourcing deals, you can go and Google a bunch of really great potential opportunities, but we want you to analyze their financials and their unit economics. We also want you to convince the entrepreneur to let you see those things. That is probably the biggest skill is the sales part of convincing entrepreneurs to allow you to invest. And attendance to all the workshops is not required, but highly encouraged. You get candy, you get to hang out afterwards, and I'll talk to you about, I don't know, we'll share some secrets of the industry if you show up in person. So yeah, highly encouraged, but all that to say, if you can't make it because you have class and midterms, so on and so forth, we will post the recordings online.
Okay, if we ask questions later,
Absolutely. Yeah.
we can email you on that?
There's an email, vccc@ugrowthfund.com. Any case comp email communications, send it there. If you have questions for me, I will be here every week during the competition. I'll hang out for 30 minutes afterwards so we can chat.
Someone mentioned that they help out at Nightly or
Nightly. I know Nightly. Yeah.
.co.
Okay.
Does that count as part of the rules?
I mean, you can participate. You just can't have like 4 folks from Nightly. But tell Graham I said hi. Okay. Dates to remember of the VC competition. So look, this happens over the course of 8 weeks. It's kind of like a class. It's very long, but I promise you it's totally worth it at the end, especially if this is what you want to do. Also, there's cash prizes to be won. Okay, so the team registration deadline is October 9th. That's this Sunday, I believe. We will send out a link after the event tonight, and then also the VC competition website will have the link to register your team. So you find 2 to 4 people, fill out the Google form, and so on. So this is different than the email sign up that you've already done. No one has filled out the team registration link because I just made it today. So everyone has to go do that. Next week, we will cover workshop number 2, which is on how to find deals. So deal sourcing and then how to screen those deals. So I probably look at, 20 investment opportunities a week. I'm not going to spend, 2 weeks doing diligence on all those companies. I kind of have a shortcut. Yes, no, this checks all the boxes. This doesn't. As part of the process, you're probably going to encounter, 50 companies. If you go to these websites, hundreds. It's helpful to develop kind of a shorthand of like why you want to pick certain companies or what kinds of companies to look for. Sorry?
No 2 teams can pick the same one.
I mean, you can, but just don't collaborate on it. Don't do it on purpose, I guess.
Yeah.
What's the basis of your shortcut method exactly? Based on financial?
It's different for every fund. So for our fund strategy, I can try to find companies that, so we invest the whole gamut from seed stage all the way to pre-IPO. So companies that are about to go public. Right now, given markets, I'm not looking at companies that are wanting to go public because who knows when that's going to happen. I'm not looking at late stage companies either because those valuations have gotten absolutely crushed. So I'm looking a little bit earlier. So Series A and Series B. I'm looking for great founders that have startup experience, but also have had investments from pretty prominent funds, like the top tier funds I named earlier. I mean, that's just to name a few of the criteria. But there's also, and we'll talk about it in another slide here as well. So we'll get to that. One of the important dates I want to highlight here is October 21st, the selection and description of 3 companies due. So you are, again, phase 1, go find a company to analyze. That will be due to us, right? Like pick 3 companies and give us a short write-up on why you think it's a good investment. That's just phase 1 of the competition. Like nothing is actually due until the 4th, which is when your actual analysis is due. But in order to keep things moving, like you need to have those 3 companies sourced. Don't wait till the last minute because you're going to not find a great company. I mean, or if you do, more power to you. But yeah, we're going to have the 3 companies due on the 21st. We'll do our 4th workshop. You'll submit your investment analysis, which will just be a PowerPoint presentation, and we'll give you guidelines on what that should look like. We'll review that internally, and then we'll announce the top 5 teams. So there were 120 folks that signed up. A lot of them aren't here today, so totally fine. But of those folks, we will select the top 5 teams, and they will go on to compete in the semifinal round. Those top 5 teams will also get paired with like associates or analysts or senior associates or principals from Atlanta funds. So again, really great networking opportunity there to work with people that work in industry. So we'll pair you with a mentor, and then your presentation will be due the day before the semifinal competition. Now we're running this competition concurrently in our San Diego and Salt Lake City markets. So we'll pick the winner from each city, and then you'll compete on a national level virtually on December 1st. Okay. The basics of the competition. You are investing out of a $50 million seed stage fund. Your objective is to find a great seed stage investment, conduct due diligence to determine the likelihood of success, and then convince your partners, aka the investment committee, to invest in this company. Now, What do you get out of this? Number one, there's some really great mentor pairing for the top 5 teams. And number two, you're competing for $7,500 in cash prizes for the top 3 teams. What else? All workshops will be recorded and posted to the website. That might take like a day or two because it takes a lot to upload and cut and edit and all that. So attending in person or online is the preferred and recommended method. And lastly, look, these events in the Zoom links and all that, it's open to anyone who wants to come and learn. So if you don't want to compete, you just want to learn, by all means. If you have your brother, your sisters in high school or middle school, and they're interested in VC, by all means, share the link with them. Okay. This is, UGF is all about providing learning opportunities. The only caveat for the competition is that you have to be enrolled at an Atlanta area college or university to compete. Okay, questions about the competition before you go into the first workshop?
We have a very condensed time frame to choose 3 companies.
Yeah.
I'm trying to visualize how exactly are we going to be able to work it out in order to make such a big decision.
Yeah, it's.
Are you how involved are you and your team? Saying like, hey, I wouldn't go with this because this idea is completely ludicrous.
We will be helpful, but we also want you to develop that skill set internally. So there'll be, I don't know, it depends. I'll give you the consulting answer. We will try to be helpful, but if it's a question where like, well, we actually want you to figure that out, we'll say so. But yeah, no, we totally get it. It's a short time frame. It kind of mimics what it was like last year to invest in companies. You get a call and be like, they would say, you have 7 days to give us an answer. And you're like, a lot of our students are staying up all night. I've stayed up all night working on deals to get it across the finish line. But anyways, all that to say, if you start early, you'll have a better chance at finding some really great companies.
Yes. And all of them are private companies.
Yeah.
My assumption is that you would like to learn more about them. Do you then call them and ask them for their financials, or are
Yeah, you call them.
we call them?
Yeah.
We're allowed to do that.
You're allowed to.
I was going to ask like whether you want us to do the qualitative measures rather than financial.
Both. We want both. We want qualitative and quantitative. So the point of getting access to their financials is so that you can run like a unit economic analysis. You can forecast. You don't have to build a full DCF model. We're not going to teach that. But you want to know on a fundamental basis whether or not the company has the chance to succeed. We'll cover unit economics and stuff like that a little bit later. Yeah.
Control presentation.
The semifinals will be here in person. The national finals will be virtual. Yeah. Okay. Anything else?
What are the most common questions you're being asked?
I mean, it's more logistics about the competition. I think we'll cover a lot of the questions that you end up having during the competition, but as they come up, during the week, if you're doing research and stuff like that, yeah, feel free to throw a question across. We're happy to answer. Okay. Venture capital fund economics. So, you think about height, for example. Height follows a normal distribution or a bell curve, right? Well, most of the people are going to sit in kind of the average, that middle bit, and then you're going to have, very few people that are like 7'1", and you're going to have very few people that are 3'5" or whatever. Venture capital economics follow what we call the power law distribution, meaning that the first 20% are going to generate 80% of your return. Right. And so that's because, again, you're going to have 1 or 2 huge winners, but most of them are going to be not that great or complete losses. Right. And so that's kind of the probability and stats behind venture investing is that the companies that you invest in should all have a certain degree of likelihood of becoming that one winner. Because more often than not, you're not going to make that much money. So You're just taking very calculated bets on things that are most likely not going to work out, but you're hoping that one or two of them do. And look, this is the chart to kind of illustrate that venture investing does follow the power law distribution. So these are the top 100 US VC-backed tech exits since 2009. So you've got one that generated most of the return. That happens with venture funds also in their performance. You'll have one or two that have crazy performance. Most of them are kind of in the middle. A lot of them don't actually return money at all, or just make enough money to return the fund and make no profit. Yep.
The significance of the 80-20, I heard you say. But
Yes.
I didn't catch it.
So, oops. Good answer. Okay. So venture investing follows the power law distribution, meaning that 20% of your investments are going to generate 80% of your returns. So that's why you kind of want what, depending on the style, especially the seed stage fund, all of your potential investments should have the probability or the potential to generate outsized returns.
Going for the fences.
Oh yeah, that's the best part about seed investing. So we're a growth fund. We're a lot more risk averse as it relates to venture investing. We're looking at companies that have established financials and a pathway to profitability. Seed stage investing is like, yeah, you're swinging for the fences.
One of the things I was thinking about is how do you sort of gauge market health for a market that doesn't exist?
That is a really great question. We talk about it in workshop number 3 with a really good example. There's one that comes to mind that I don't want to give it away just yet because it's a cool discussion. Great question. Hold on to that for 2 more weeks. Okay. Okay, so let's talk about why it matters that you have to make investments that have the potential for outsized returns. So hypothetically, let's say we've got a $100 million fund, just to make the math easy. We're going to make 10 investments of $10 million each, right? That's probably not how a fund would normally invest, but just for the example, that's what we're going to do. So we expect to have 2 of them that will return 2 to 3 times your investment. We expect about 3 of them to return 1 time your investment. So if you invest $10 million, you'll get $10 million back. 4 of them are complete losses. How much does your one winner need to return in order to have a successful fund? And now, mind you, a successful fund returns about 3 times the invested capital. So it returns about $300 million. So let's run through the math here. You make 10 investments of $10 million each. 2 of them, let's be generous here, will return 3 times the investment, right? So you have 2 that return 3 times the $10 million investment. So that's 30 million plus 30 million. That means $60 million coming back to the fund, right? You've got 3 that return 1 times the investment. So if you invest $10 million, you get 10 million back. That happens 3 times, you're up to $90 million. 4 of them are complete losses. You've got 90 million in the bank that have returned from all your investments. You've got 1 company left. How much does that need to return in order to be considered a successful fund? You're trying to get $300 million. How much does that need to return? 210 million, right? So 20 times, right? I don't know if we talked about it yet. Yeah, okay. Yeah, 20 times the investment, right? So you're taking these bets, and look, there are some really big upside potential for a lot of these investments, but ultimately you need all of them to have some degree of hitting at least a 10x, all of them, right? The 20x is like, you got really lucky. This company really blew up. I just said that. Okay, every deal needs to have the potential of returning 10 times your investment. Google and Facebook return nearly 1,000 times investors' investment. There's a story about Sergey and Larry Brin that were like at a party in Silicon Valley, and this investor wrote them a check for $100,000. At the IPO, that 100K investment was worth $1 billion. Like, that's what venture investing is, right? You make these really risky bets because that easily could have gone to 0 as well, right? You could have lost all your money. But it just so happens that they won, and they won big. There's another famous investor. His name is Jason Calacanis. He's a big angel investor. He has his book called Angel, and it's about how he took $100,000 and turned it into $100 million. He took a different approach. He I think he evaluated like, I don't know, thousands of companies, invested in like 100 of them, and then like took really calculated risks, and then turned that into $100 million. One of them being, I think it was Facebook, was one of his investments. Anyways, the book's really cool because it talks about like his strategy on meeting entrepreneurs, convincing them to let you invest, and like running those meetings even. So anyways, it's a really good book. But ultimately you are looking for companies that have the potential to become monopolies someday and ones that scale really fast. So I know that like in the US, right, there's antitrust laws in place that that prevent companies from becoming monopolies. But think about Google. I mean, they are definitely close to a monopoly. Like they have competitors, but does anyone here use Bing for search engines, right? Like, because it's not Google. It's not as good as Google. And actually, I don't even know if it could be better today. Bing could be better, but no one would care or know to switch off. Because another thing in venture capital investing is that if you build a business that is marginally better than the existing technology, no one's going to care. It's got to be like 3x better in order for people to want to switch over. And that just also depends on like how big the switching cost is, right? So we're looking at some neobanks right now. So these are
Like Greenlight?
like Greenlight. Yeah, Greenlight's a good Atlanta company. In order for you to switch from Wells Fargo or Chase or Bank of America over to Greenlight, it's like you have to switch over your auto pay, your direct deposit, like your savings accounts. Like that's a pain in the butt, right? So I'm only going to switch to another technology if it's like leaps and bounds better than the current banking services I use right now. Or specifically for the companies that we're looking at, they actually have a specific affinity focus with the folks that they are serving. Okay, so things to look for in potential deals. Number one, and this isn't always the case, but for venture, it usually is. Can it scale super fast? The industry that tends to scale the fastest and the most efficiently is software, right? You build a piece of software, it's done. Maybe you make some like feature upgrades to it, but it doesn't cost you any more money to produce another unit. You can just go out there and sell it and your cost is already like incurred, right? It's not like you're selling a widget, right? It costs you X number of dollars. You're making a small margin. You got to sell it over and over again. Software is great. You built it once, you add a couple of features, fine, but you're basically on a subscription service. That's going to be pretty predictable. So that's one thing that we look for. Can it scale and grow really quickly? Like, is there a huge demand in the market that necessitates this product or service? Is there a problem that it's solving better than its competitors, right? Those are things that we're looking for. Another thing is a strong team, especially at the seed stage. You are often more betting on the jockey than you are on the horse, right? So if you have a really strong management team, a great leader, someone that's really good at convincing people from other great companies, like if you can poach folks from Google and Apple and some of these other great companies at the seed stage to come to your company, it's a sign of a good team leader. They're also really good at convincing people to invest in their companies, but they also probably have a unique insight into the industry in which they're working. The other piece, and we'll talk about this in due diligence training number one, is do they operate in a huge potential market? I'll give you an example. When we invested in Lyft, a lot of investors were comping against the taxi cab industry, which was like, I don't know, call it $400 million. I'm making that up, but it wasn't that big. What a lot of investors failed to realize was that Lyft and Uber weren't eating into just the taxi cab market. They were eating into the entire transportation market, which was a $1.6 trillion market, right? So you factor in, maybe it's raining out, so I'm going to take a Lyft today instead of taking the train or the bus. How many of you still give your friends rides to the airport? Like before, that was how you did it, right? You're like, hey man, I'm going to the airport, I need a ride. Now it's like, maybe I need a ride to the airport. It's like, cool, download Lyft, right? Like, it's just not, so you're eating into those rides. And, if you take that into account, you're eating into like a huge market, transportation market, not just the cab and rideshare market. So anyways, operates in a huge potential market.
Also 3x more alive.
Absolutely it is. You might get canceled on a couple of times, but you'll get there, right?
If you're in the Middle East, generally, you're likely to get food thrown at you if you're going to say go get a lift.
Yeah, no, exactly. Culturally
That's a little
speaking,
different.
yeah. Culturally speaking, absolutely. The other piece about look, if you can find a market that is tiny today, but has the potential to be really big, that's actually what really good investors can do. So you think about Airbnb and you're like, how big is the market to rent out your couch to someone that wants to sleep there for a couple of nights that's visiting San Francisco? Tiny, right? How big is the hospitality industry? Massive, right? Airbnb completely is unseating the traditional hotels and, like hotel accommodations, right? And like where you stay when you're on vacation. So again, before it was the couch surfing market, but you think about it, it's after the hospitality markets. Big market, a lot of money. The other thing that you want to look for is unfair advantages over competitors. We call this competitive advantage, more specifically, sustainable competitive advantage, right? So we'll talk about this in future lectures, but like price is not a sustainable competitive advantage because your competitor can just drop the price to meet you halfway. An easy to create feature is not a sustainable competitive advantage because your competitors can also innovate up. Network effects. That's actually a really strong competitive advantage. Think about Facebook, right? Facebook's utility and why it's so hard and why they have such a dominant hold on the industry is because it's strong because everyone else is on it. Even if there's another one that pops up, you're not going to leave Facebook until a lot of your friends leave to go on this other social media platform. And that takes like all of you moving at once, which is a very difficult thing to convince people to do. So Facebook is just like we got it. We got you all here and you're not leaving. And if you are going to leave to something else, we'll probably just buy it anyways. So where they're at. Lastly, can they create liquidity in the next 5 to 10 years? So can this company basically get acquired and go public? Right. So there are some businesses like Rose's Pizza, for example, right? Great business, makes great pizza. Even if they open, 100 locations in the Atlanta area, probably not going to get acquired. It's a great pizza business. It's going to generate decent profits for years to come. But no private equity fund's going to come in and be like, I want to buy Rose's Pizza. And they're not going to go public either. And if they do, I'd be their number one supporter for sure. But like, let's go Rose's Pizza. But look, that's just ultimately never going to happen. It is what it is. So it's a great lifestyle business. That's not what VCs are investing in. Okay, so this is also important to understand how VC funds are structured because this is the last leg of the event. They are generally small partnerships. A few people that have come together to say, I can go and find the next great company. I can diligence those companies. I can meet those entrepreneurs and I can convince them to let me invest. Not that big of a company, right? Even if we talked about St. Hill Road, a lot of those buildings are not very big. They're going to have 2 to 3 partners, a couple principals, a handful of associates and analysts, but they manage $1 billion, right? Not very big companies, but they manage a ton of money. Each partner will go out and find and lead their own deals. So instead of, you are all partners in this situation, each team is one partnership, I guess. So you're going to go out and find that deal. You're going to lead it. And then you're going to convince your other partners to allow you to invest in that company. Because it's a partnership, there needs to be a little bit of accountability. It's not just like, hey, I found a great company. I'm just going to write a check. I don't care what you think. There are checks and balances in place. And that is what the investment committee portion of the competition is. Let's see. So the final event will be the investment committee convincing, well, these are going to be professional VCs too. So just get ready also, if you make it to that leg of the competition. They have decades of experience in this industry and they know how to cut to the core of the deal pretty quickly. So just prepare for that. Ask yourself, okay, the biggest thing to understand about investments is the risks, why you should not invest in that company. If you can mitigate around that and still come up with a yes answer, you probably found a good investment. You'll at least be able to hold off the investment committee when they start asking some really hard questions. Okay, so this is the slide I was telling you about earlier. This is where you can find deals. These are companies that are raising seed stage investments currently. So Republic, Start Engine, and WeFunder are probably the best ones. But But you've also got Circle Up, AngelList, Seed Invest, so on and so forth. Stonks, STONKS, Stonks is another good one. They do demo days all the time. These are all just kind of like online platforms that you can use. Here in town, there are 2 sort of co-working accelerators or like kind of venture labs in town that you should also look at. One is close to here. It's called the Russell Innovation Center for Entrepreneurship. A lot of really great seed stage investments coming out of there that are being that are kind of going through an incubator kind of program to get ready for venture capital investment. The other one is up in Buckhead. It's called Atlanta Tech Village, which is basically just a big co-working space, but there's a ton of great seed stage companies that are out of there. So I'd recommend going to those websites and just looking at the companies on there, because I think another really great part about, another strong skill that you need as a successful VC is to meet these people and build that relationship, right? Relationship building is huge. So if you can find that person in town, take them to coffee, whatever, I would recommend doing that. The Russell Innovation Center for Entrepreneurship. Yeah, right. RICE. Yeah.
Based on, I had to go to the rest. I don't know if you come to the. Let's see. Get more, get a higher rating based on, let's say, mention incubators, taking a small equity position.
Right.
If you find one with no equity position, not there, this matter in the overall.
So,
presentation?
yeah, it's a great question. One, they have to be raising or will be raising soon. And so the reason we have these on here is because they're going to have their financials already published on here, on these websites. So it's really easy to get access to the information needed to compete, like the baseline. But if you want to go a step above and meet a real company here in Atlanta, those are the other 2 places that I would recommend going to. Now, ultimately, the judges are going to judge based off of the quality of your diligence and the quality of the company that you look at. Like, do they think this is a great investment or not? So it will be very much like a VC investment. So those are the main 2 things to optimize around. Okay, so a couple of things when you're building these relationships or meetings with entrepreneurs, there is no promise of confidentiality because we are going to publish our recordings online. So if they're super concerned about, like, we're in stealth mode, we've got this crazy tech that we want no one knowing about, probably not a good idea to give this information to a bunch of students who are going to publish this stuff online, so on and so forth. So, and look, ultimately, it's not like every single company is out here building like stealth deep tech. A lot of companies on WeFunder, like all that stuff's on there for anyone to see. So again, it's just like an easy database to kind of start with. But yeah, you know, no one here is signing an NDA, but it's kept pretty small. It's like no one's going to just, I don't know, no one's coming to the UGF website to like source deals, right? Through the competition. So, but if they do ask, just, you know, don't be like, yeah, it's completely confidential, blah, blah, blah. It's like, we're going to publish this stuff online. So now the caveat is, like, they're going to probably get in front of a handful of investors. So it's good pitch practice. It's good networking opportunity as well for them. Okay, the next workshop is next Thursday right here. That's the wrong time, sorry. It's next Thursday, same time, 5 o'clock. I will send out an email afterwards with a recap and everything. The location will be here again. So your assignment right now, number one, I'll send out the link for it, and it will also be found on the case competition website. Go register your team. If you don't have a team, hang out, find someone else in this room that needs a teammate or team, whole team. And you can build one that way. If you still don't have a team, like come Saturday, send an email to the vccc@ugrowthfund.com and we'll get you paired up with someone in the Atlanta market. So that's due Sunday the 9th. And then on the 21st is when you have to submit your top 3 companies. So that is what, 15 days from now? Yeah, start looking. And then you can, by the way, you can come to Oh, yeah.
Is it the 13th?
Yeah, this time is wrong. It should be the 13th at 5 o'clock Eastern Daylight Time. So, yeah, sorry about that. Yeah, look, if you start looking at companies now and you've got like a list that you want to go through at the next meeting, bring them and I'll help you go through it.
Then we'll be spilling the beans to everybody else.
Maybe that's the risk you run. Or you can email me. That's fine too. Okay, I think, yeah, that's everything.
I can't find your email.
I will. Like a Slack channel. I don't use Slack.
What about Pronto?
I use Pronto.
We use Pronto.
Do you really?
Yeah.
Wait, you guys use Pronto too? What? So UGF is investor. We were investors in Pronto, and we looked at they raised recently. UGF is like the top power user of Pronto.
Are you telling us that we have a chance to go to the nationals already?
Maybe. You're using a great product. Does it beat Slack? I don't know. See, that's a
That's a good question.
Y'all use Slack? I mean, or Pronto?
Pronto, we actually, JJ and I use. We use it for PMG.
Group me.
You said what?
I don't know. Sorry, I don't know if it works. Or how it would work. Can I just create a chat for like Atlanta only?
I would think so.
All right, we'll figure that out. You can download Pronto and use it. That'd be awesome. Support our portfolio companies. If you email vccc@ugrowthfund.com, I monitor that. Myself and Savannah, who's helping run this, we both monitor that email address. Any questions you have, if you have any issues with registration or finding a team, anything at all, just email that and then go from there. Folks online, you still awake? Any questions? Any questions there? Okay, well, I will leave the Zoom open for another, call it 10, 15 minutes. If you want to chat and try to find another team member, if y'all want to hang out here, I'll be here for another 10, 15 minutes as well. So thank you all for the time. Appreciate y'all showing up. There's a ton of pizza left. Please grab some. If not, I will give it all to Zion to take home. All right, thanks everyone.
Thank you.